Alright guys, today I'm going to break down this trade on Nasdaq from the 19th of November. I'm just now getting around to making this video because I haven't had chance. And yeah, I'm in replay mode, so just ignore all these drawings that are just scattered around. It's just because I'm in replay mode at the minute, just so we can focus on this day. So this bullish daily candle from Wednesday is the day that we're focused on. And I'm going to jump into why I wanted to trade this. Okay, so focusing on the formation of a weekly candle, we can see the week opened on Monday, traded into this gap, and then this gap was used to push price lower and push price into this daily swing low over here to the left. And now from here, we get a bit of a reaction from this low, but this is not a candle 2 closure on the daily. Okay, so we can anticipate that the Wednesday would expand lower, continuing from Tuesday. However, if we trade through 50% of Tuesday's candle, we can anticipate this is going to be a bullish day, right? So dropping down to a 4-hour chart, price action on the 4-hour is not the best, but you can still get enough data from this to frame a trade, right? So let me just mark out the daily open for this day right here. So we open low and we form a swing low here on the 4-hour, right? So we trade lower and then we trade back higher, creating this 4-hour CISD right here. Okay, so when 2 a.m. closes above this down closing candle, okay, so we have a reversal here. Now we didn't trade into anything significant right here, but we can frame this as being a open low high close, and using this 4-hour order block to frame a setup from to trade into. This was my draw, this high from Monday, this swing high, this was my draw. Okay, I didn't think price is going to get all the way up here, so this was my target, and then you can see the reaction we get once we get to that high. So marking out 6 a.m. because this is the 4-hour candle that I was trading at the time to be able to catch this expansion, and then you can see 10 a.m. opens high into the draw and then closes back lower. So going now to 1-hour time frame, I didn't really use the 1-hour too much, but one thing that is significant to mark out is the reaction from this 4-hour order block, and this is technically a 1-hour CISD as well, but we do have this fair value gap in here, which we tap into this going into 9:30, right? So going into a key time for price to be able to expand. And then I'm looking to the left and I'm seeing this low resistance liquidity to the left, right? So this is looking good for longs at this point. Also for the 4-hour candle at 6 a.m. to trade higher, we need to open low first, which is what we do here. We open low into this fair value gap and start closing, rejecting out of it. Also at 9:30, we had put in an SMT right here with YM. So YM had taken out this low and NQ had started to reject, and all assets on the lower time frame had started to reverse. So we put in a SMT at a key time. We have a higher time frame key level. So we have everything. We have a higher time frame draw on liquidity as well. We have everything we need to be able to trade this now. Okay, so I'm just going to the 3-minute because this is the time frame that I entered on. Okay, so you can see here, what do we have? This V-shaped reversal sequence where price expands and then is met with expansion. So we expand lower and then we expand higher, and this bullish candle closes above this down closing candle range. And then within that, we have the order block. We also have a small gap here, which price trades into as well. And we form this down closing candle. So my entry was as soon as we closed above this down closing candle, respecting this gap, I got in, and my stop loss can go on this candle's low because there's no reason for it to come back for this low now. And it should just expand, which is what it did. So took it off at that high, which we had mentioned earlier. but it was about 3.7 R on this trade. But very simple, very simple trade, and not much like really goes into this apart from just aligning the time frames for expansion, and just using logic. Like, why should price trade somewhere? Okay, so using, like I said at the start, the weekly formation of a candle. What should price do on this Wednesday based on what Monday and Tuesday have done, right? So when you put all these things together, then it just becomes easy then to just get on side with these expansion moves.